Hey guys, Sean here. The biggest enemy we have today is inflation and it's about to get out of control. So just yesterday, I went around the country, dined at cafes, bought some groceries, and I can tell you that inflation is higher than 7.9%. My favorite cup of coffee rose from $4 to $5 and that's a 25% increase. I truly don't understand how this charade can continue and very soon we might be choosing between paying for gas or paying for food. And as insane as this sounds, it isn't impossible that official inflation could reach double digits within a couple of months. Countries like Spain are already at 9.8%, and higher oil prices will likely push the numbers higher for the next few months. I'm seeing a lot of conflicting reports like consumer confidence rising despite higher inflation, and I think it's all hogwash. Salaries just aren't rising high enough to cover the rising costs. Now, we know that the Fed is going to continue hiking rates, and a lot of economists are calling out for market crash. But what if it doesn't and inflation continues to rage on? And in this video, I really want to tackle the scarier and more likely scenario of long-term elevated inflation and how we can prepare ourselves. Because if this comes to pass, many people will become a whole lot poorer even if the amount of dollars they earn stays the same or even increases slightly. We might be hitting $10 Big Macs very soon. Now, the threat of long-term inflation is very real, and I don't need to tell you that CPI inflation is flawed, right? We just need to look at three things that are affecting us every single day. I'm talking about food, gas, and housing. According to the UN Food Agency, food prices have increased by 20.7%, led by oils and dairy products, and gas prices are even worse. We are talking about over 50% increases within a matter of weeks. But the biggest ticket item, a home, is becoming more out of reach every single year, right? In 2020, a home could cost around $320,000, and today it's well above 400 grand. That's a 25% increase in just 2 years. Now, we all know that salaries aren't keeping up, but believe it or not, many businesses, big or small, haven't really passed on the big price increases to customers yet. But this is about to change, and the real price increase, I believe, is just down the road. So the Fed has already done its first rate hike, but it might be too little too late. The stock market barely flinched, and commodities like gold and silver actually went up instead. This just shows us that future rate hikes might be priced in, and the effect of it crashing the markets might not happen. We are still deeply in highly negative real interest rates, and when you only raise rates by 25 basis points or 0.25%, there really isn't going to have much effect. We have to remember that since 2020, the money supply spiked up by over $6 trillion, and with so much money chasing fewer goods, a small rate hike just won't cut it, right? Now the big question is, what will happen down the road when power continues to hike? Well, there are just three possibilities, right? The first, that it will cause a crash and the Fed does nothing and let the free market rebalance itself. Now, this is highly unlikely, by the way. And the second is that nothing happens, right? The markets just shrug it off and it continues to rise. Or the third, the taper finally causes a crash and then the Fed panics and reinflates the entire economy by dropping rates again. Now, if you look at the previous rate hikes done, we can see that the hikes have been getting progressively lower than before. Every time it reaches a certain point, the market starts to shake and then the Fed lowers it back down again. I'm not saying that this will happen, but it's very likely that the Fed won't be able to hike anywhere near above 5% or even 2.5%. If they decide to drop it back down like they did time and time again, I think inflation might just get worse. And I want to go through four fundamental reasons, or I call them the four horsemen of the inflation apocalypse, to why we might see inflation last for much longer than we expect. So the first threat I see is countries getting out of the US dollar. Many countries around the world, especially in Russia and China, they have been taking steps to de-dollarize out of the US dollar, and the Western sanctions on Russia are just causing this to go into hyperdrive. We are talking about the sanctions that froze Russia's assets and stopped them from transacting using the US dollar. But if we look closer at the events happening around the world, countries are silently making agreements or at least thinking about breaking away from the world's reserve currency. China is in talks with Saudi Arabia to buy their oil just using the yuan alone. Russia and India are about to work out a deal where rubles and rupees are used to trade with each other without the dollar in sight. Plus, Russia's demand for countries to pay only in rubles for their gas, bypassing other currencies like the euro or dollar, is going to be a problem. Now, the whole world is watching this, and it won't be a surprise if more nations actually start to de-dollarize. And that really doesn't mean they have to dump treasuries outright. They could diversify into a neutral asset such as gold. Remember, buying gold from the international market involves selling their dollars for gold because gold is still priced in US dollars. This could cause less demand for the dollar and depreciate it, and this means imports will become more expensive and higher prices on store shelves could happen near you. Now, unless you're on another planet, you know Ukraine and Russia are fighting it out in Europe, and this conflict is costing all sides lots of money, and it's resources that could be diverted into better investments, but it is now burned and blasted away. The US alone has approved a $13.6 billion package to Ukraine, and this just piles on more numbers onto the growing debt bubble. Just remember that the adventures in Afghanistan are estimated to cost taxpayers over $2 trillion, and we know the outcome of who eventually won there. Now, all these are borrowed money, and the more the conflict drags on in Europe, the bigger the debt bill will be, and eventually it will need to be paid back. And this will just add more pressure to keep interest rates low in order to make it even possible to pay the bill down the road. And you guessed it, it means inflation will be harder to control. Now, all this money sent to Ukraine to defend themselves is in the form of weapons, and the only people really profiting from these are the military-industrial complex. So if you're interested in profiting from this conflict, you can look into stocks like Lockheed Martin and Raytheon Technologies, which are both massively up since the start of the year. So let's talk energy for a minute. We all have heard of a renewable future powered by solar and green energy, but realistically, those are still many years away and oil still runs the world. And if we take a closer look, a lot of energy games are being played between Europe, Russia, the USA, and even Saudi Arabia, right? Biden recently was on a world tour pleading for more oil. The Saudis are refusing to pump more to lower the prices. And very soon, Russia might be selling their oil for rubles as well. Now, Russia accounts for 11% of the world's crude oil imports, just under Saudi Arabia, so this move alone could affect the oil market dramatically. Currently, Germany has refused to pay in rubles for its gas, and it has reached a deal with Qatar to cut its reliance on Russia. But we have to remember that this is the more expensive LNG and not the cheaper natural gas through a pipeline. Now, all these events could keep energy prices elevated for some time, and this means that everything is going to get a whole lot more expensive. You're talking about shipping, transportation, heating, electricity, and even gold mining are going to rise in price. You know, energy prices are getting so bad that even California, they are proposing an $11 billion relief package to give drivers, I think, around $400 each to offset the higher gas prices, right? Things are going to get much worse if oil prices continue to stay high. And finally, we need to talk about a possible food crisis, and even Joe Biden has said that these shortages are going to get real, very real. Right now, the conflict in Europe is contributing to a global growing food crisis, and it's not hard to understand why, right? Over 30% of the world's wheat supply, 20% of the corn, and 75% of the sunflower oil comes from both Russia and Ukraine. So essentially, one of the world's breadbasket is being bombed and the other is getting sanctioned. Exports from these countries are definitely going to be affected. And if push comes to shove and Putin decides to sell his wheat and grain for only rubles, this will spell disaster. China as well, one of the world's biggest food exporters, is warning of a poor harvest down the line, and this can seriously cause prices to really rise. The thing is, this food shortage will affect different countries differently, right? If you're in a country like Yemen, which depends a lot on Ukraine for the food supplies, you are facing a real crisis today. But for many of us, right now, the shelves are still stocked, but prices are going up, right? I'm personally seeing prices go up by around 5 or even 10% easily, and I'm talking about the essentials, guys. We're talking about bread, eggs, and milk. Even vegetable prices might go up by 20 or 30%, and it's going to be a challenge to even live healthy anymore. All these are consequence of supply chain issues and too much money chasing fewer goods. Now, I wish I could be the bearer of good news, but things could actually get worse. There have been many calls that hyperinflation is on the way, and while I don't think it'll be anytime soon, we are inching towards it, and it's really becoming a possibility. Right now, the US national debt is at insane $30.3 trillion, and the US government still continues to run huge deficits. Biden is proposing a whopping $5.8 trillion budget, and this just adds more strain to the existing debt. We know that they are planning to start taxing the ultra rich with the billionaire income tax, but even if it does raise the $360 billion target, it won't make a dent on the debt. Just the interest payments alone in 2022 are projected to hit $357 billion, and it's going to snowball to over $1 trillion in just 10 years' time. And that is really insane. And here's the thing, sooner or later, the debt will have to be paid back. Almost a quarter of the debt is being held by foreign countries and international investors. We are talking about countries like Japan, China, India, and Saudi Arabia, and their economies could seriously get damaged if they aren't paid back. And this brings us to the inflation rate issue. Interest rates cannot afford to rise too high, or you'll make servicing the debt near impossible. We all make fun of Congress every time the debt ceiling is raised, but I'm very sure countries are getting weary of this, and every time the debt breaks a new record, they are getting tired. It might reach $40 trillion or $50 trillion down the road, and it raises the chance of a default. Now, this is the crazy part. If de-dollarization continues and countries stop lending the US more money, it can lead to truly disastrous consequences. Either they'll start to print more money to pay off the creditors, and that just means outright hyperinflation, right? Or the more likely scenarios where the Fed just steps in and starts buying treasuries all over again, aka another quantitative easing. But this time it might truly never end. Now, I don't know what the endgame will look like, and I truly hope things won't morph into a Turkey-style 60% inflation rate, but things can really spiral out of control. So before I start sounding like Dr. Doom, I think we really need to take the scenario of a never-ending inflation seriously. Ever since we left the gold standard, inflation has been never-ending, and it's just the degree of how bad it can get. But never before in history has so much money been printed in such a short amount of time, and no one can predict what will happen at the end of the rate hikes. Will asset bubbles really pop and we move into a deflationary death spiral? Yes, it could happen, but we won't know how long that might take. But another scenario could be long-term elevated inflation that will persist, and that means staying in cash is also a risk we need to consider. And that's why I think it's really important to diversify into real tangible assets that can resist or even appreciate in the face of inflation. We're talking about farmland where you can grow your own food, real estate where you can jack up the rents if prices go up, and of course gold and silver to protect your purchasing power like how it has done for hundreds of years. Plus, you can even consider some stocks like McDonald's that could benefit from inflation because they have the pricing power to absorb costs or pass it down, and they are more or less a mini real estate company as well. Rising rents won't really hurt them as much, and people will still need to eat even though it's junk food. Let me know if you want me to do a video on stocks that can really do well during these inflationary times. But anyways, many experts including Goldman Sachs believe that we are in a commodity super cycle and we could be seeing much higher commodity prices including gold and silver down the road. And that's why I'm still positioning myself well in precious metals. Hopefully I am wrong and inflation does get back in line, but as things are, the chances are going to be quite slim. Right now, it's anyone's guess if we will see a market crash soon or if long-term inflation will persist. We are now in the midst of big global events in play, and even if the conflict in Europe ends tomorrow, the consequences of the sanctions could mean currency crisis for years to come. I think there will be more attempts to de-dollarize, and this could cause inflation to worsen. And as investors and individuals, we really need to take a step back and consider the never-ending inflation scenario. And for me personally, that means accumulating more hard assets like gold and silver to preserve my wealth. So there you have it guys, let me know what you think. Are we more likely to head into a period of lasting inflation, or is a big crash just around the corner? Let me know in the comments below, and if you enjoyed today's video, be sure to smash the like button and subscribe for more gold, silver and finance videos. Thank you all for watching, and I'll see you soon.